But in a multifamily situation, like in single family, our per unit cost is higher, but you tend to get some kind of per unit cost premium break discount on that. So if you're buying 100 units or 20 units, it's usually cheaper by the unit than if you were trying to buy 20 houses, right? The other thing that's interesting is that in the multifamily space, it's based on the net income of the property. And we'll go through this at some point, but it's called net operating income. So the valuation is based on that net income. It's really not based on, hey, look, Sally bought a house just like mine. She paid this and that's what mine is now worth. No. In an apartment space, multifamily space, generally over 5 units, they start to look at the income that it's generating and then compare the rates of return. So if I want to be competitive and I want to get a strong valuation, strong price on a resale, I want to sell my property, then all I have to do really is kind of manage that income and expenses, right? And once I drive that net profit up, then my valuation goes up. So that's kind of unique too. Whereas in a single family space, it is kind of comparable based on square footage, number of bedrooms and baths and garages and other things like that. So that's a little different. And over in the multifamily space, you're buying and selling to and from investors, a little bit more professional type transaction. Whereas, and very mathematically oriented. When you're dealing in the single family space, you're buying from maybe other investors, but typically end user sellers, and you're selling to investors and or end user sellers.